Interactive Investor is the second biggest investment platform in the UK. It's got lots of investment choice and great content, but its fixed fee model can be expensive for beginner investors with smaller amounts of cash. Watch our walkthrough review and get the steps to investing score at the end. Hi, I'm Marcus De Silva and welcome to the Steps to Investing platform reviews, where we look at the UK's major investing platforms and review essential parts of their businesses to help you find the right service for your investing needs. Now, my business partner, Simon Longfellow, and I have over 30 years of investing industry experience between us, with Simon having worked at 2 different investment platforms and myself at investment management firms as an investment specialist. It means we intricately know what you need to look for when it comes to choosing investments and investment services. Our reviews are going to focus on 2 types of platform. DIY platforms like Interactive Investor today, which are full service and offer plenty of investment choice, as well as what we call Do It With Me platforms, also known as robo-advisors or digital wealth managers, which tend to be much quicker and easier to get investing, but more limited in terms of service and investment choice. The full review of Interactive Investor and many, many more are available on our website for free. So please go to stepstoinvesting.com. Okay, Interactive Investor. This is the second largest investment platform, as I said at the top, in the UK, following a spate of recent splurges on smaller platforms. It means it has around 400,000 customers and manages £55 billion in client assets. What it likes to do is champion its flat fee charging structure, which is an interesting contrast to the percentage fees that tend to be charged by most of the other players within the industry. And whilst this is fantastic if you have a larger pot for those smaller investors starting out, it makes the service actually quite expensive. Recently, it was acquired by investment manager Aberdeen, which is interesting given the platform is a broker for funds from the whole market. Will it get stuck in a holding pattern? In this review, we're going to assess 4 really important areas of the business. So the types of investment accounts that are available on the platform, the range of investments and products that you can buy, the services Interactive has to offer on top of all of that, and of course, the all-important costs to you. We'll then finish with our overall rating for the platform. Now, please leave a comment below if you've any questions and we'll get back to you. Okay, let's get on to what it actually looks like, the website. And as you can see here, this is its homepage. It's quite distinctive blue here and orange. Some people say this is a bit clunky, this website. I think it's pretty straightforward. I mean, it's not the prettiest thing you've ever seen. The first thing we're going to have a look at is the accounts that are available. And there are 3 major accounts that we tend to look at. And you can see them actually front and center here, just below the fold on the homepage here. So SIPPs, this is your self-invested personal pension. So that's about building that future fund. You then got your ISA, which is your everyday kind of investing. Both of these 2 accounts are government incentivized, and I'll get onto that in just a little bit of a sec. And then you've got this trading account. We call it the general investment account, a GIA. This is kind of for doing everything else. It's you kind of little extras, but there's no incentives and there's no tax protection on that. Anyway, we'll get into that. I think the big thing to note about Interactive Investor that it's kind of known for is this flat fee structure that I said at the top. Also, its content. It is very good. I think its roots actually started in information and content, and that continues to be the case today. So we'll have a little look at that too. We're going to have a look at the costs as well. You can sort of see it's got some research here from a very credible agency called the Langcat that has a look at the effect of these flat fees versus what the rest of the industry does, which is percentage fees. We have a little view on this as well because we're about beginner investors, people starting out, people who don't have an awful lot of money to invest. And I think these fixed fees can actually be a bit of a problem if you are that kind of investor. So anyway, yeah, plenty, very clear website. Let's get into the accounts though. So we'll start off with your SIPP, your self-invested personal pension. So you kind of got three types of pension that you can have. You build up a state pension through your national insurance contributions. You then might be offered a workplace pension if you're employed, or you can have a personal pension. And there's a few different flavors on that. Basically, there's some restricted ones, things like a stakeholder pension. But this, a self-invested personal pension, is about maximum choice. So it makes sense with a DIY platform which has generally maximum choice when it comes to your investments, that you're going to have something like a SIPP, which is just an account that you open up and you put money into to invest, basically. But being your pension, the things to remember about this are you got up to £40,000 that you can put into a SIPP each year. And what the government will do is top that up with a basic rate. So if you manage to put £40,000 in it, they give you £10,000 extra. And the service, the investment platform, will deal with that tax relief. So whenever you put that money in, you'll get that 25% top up automatically sorted out for you by the investment service with the government. The great thing as well about SIPPs, personal pensions like this, is that you can also get additional tax relief if you're a higher rate taxpayer. Now that's not paid into your SIPP, that's something that you would do through your tax return. But that's very, very generous. So that's one side of pensions. The other side of pensions is the fact that any investing activity that goes on within your SIPP is free from any other taxes. So you'll get charged taxes on things like capital gains. So when the value of assets rise and you sell them and you make a profit, that's a capital gain. So you get taxed on that. You also get taxes on things like dividends, which is income that you receive from investing in shares. Also interest from bonds as well. You can get taxes on all of those. When you do investing within a SIPP, don't need to worry about any of that. So it's very, very attractive for that point of view. But here's the thing, you're not allowed to touch anything within it. So you put money into it, you do all your stuff, lovely, 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 but you can't take any money out until you're 55. Okay, and that's actually going to rise to 57 in 2028. So that's the sort of flip side to it, and that's how it encourages you to really put some money aside for the future. So it's a feature just to remember. But going down the page, you know, they've got some great content. Things like this, you know, their video content is great. There's also other stuff as well, which I'll get into in a sec, but things like podcasts and all their written stuff is amazing. They used to run magazines, which is why they're sort of so good at this as well. And I think this page is very clear, you know, it sort of takes you through the basics, talks about the charges quite clearly and the effect that that's going to have on you and sort of how easy it is to start the process. The one thing to remember though, they don't offer a junior SIPP, which is, I think, a relatively new thing. But basically, you can set these up for your children and start putting some money in their pension pot, ready for when they get much older. And I mean, that's very attractive because investments that are invested, you know, if your child's just born for at least 55 years, usually do very, very well. It's all about time in the market. So it's a very attractive thing. They don't offer junior SIPPs and interactive investor. So, you know, that's one downside, I think we would say. So there's that's your sort of future fund. Let's go back to the homepage here and go next to ISAs. Now, if you're not investing for your future, you're investing for nearer term goals. And we really think you should use your ISA allowances. So this is another government incentivized account that enables you to invest in different things. And there are a few different flavors of ISA, but broadly, the way it works is that you have up to £20,000 that you can put into an ISA each year. You can then invest however you want that. It doesn't matter what gains you make, any income from anything. It's all free from tax as well. So it's tax protected in a similar way to SIPPs, and that's quite attractive. There are a few different flavors of ISA. The stocks and shares ISA that you can see here is sort of the main one. It's the main way of kind of investing in the stock market. But there are a few other different flavors as well. The one thing that they don't offer actually Interactive Investor is a lifetime ISA. Now this is quite specific for younger people. So if you're between the age of 18 and 39, then you can open up what they call a lifetime ISA. You can then invest away however you kind of want to. And for every £4,000, up to £4,000 you can put into it each year, they'll then top it up with another 25%. So if you put the 4,000 in, you get another £1,000 tax-free from the government, which is a really, really generous thing. But the thing about a lifetime ISA is you can only use it for buying your first time house, or again when you're much older, but they don't offer that here on Interactive. And because it can only be opened by those between the ages of 18 and 39, it is one of those things that is for younger people. And we think that is a bit of a shame, especially for the second biggest investment platform in the UK. I think the other thing to remember is that they don't have flexible ISAs. So a flexible ISA enables you to put money into it and then take money out as and when you kind of want. And then when you put it back in, it's not going to be double counted against that £20,000 limit that you have. So it means that you can use it, as the name implies, a lot more flexibly for sort of everyday stuff and not worry about those sort of losing those tax benefits. So again, it doesn't have that ISA, which, I think for a full service investment platform, it kind of should. But anyway, again, very, very clear. It sort of explains your allowance, everything you kind of need to know about it. Lots of good supporting content as well. Final thing to mention, I think, on the investing side of things is, let's go back to the homepage here, just your trading account. If you have more than that kind of £40,000 that you can put into your pension, or the £20,000 that you can put into your ISA, then you might want to do some trading, some investing outside of that. So that's what you would use kind of these accounts for. Maybe also the other thing is you can't open more than one type of ISA within a single tax year. So maybe you've already opened an ISA with someone and then you kind of like the stuff that you're seeing on Interactive and therefore want to do some extra investing outside of that. And I think the thing to remember is that you have tax-free thresholds below which so for example, for capital gains, you can earn up to £12,300 each year in capital gains and not need to pay any tax on that. So if you're investing outside of an ISA, don't forget that you've also got these tax-free thresholds. So you can still do some investing and not need to worry about paying some taxes. But if your capital gains went beyond that, for example, then you would then need to pay some taxes on that. So I think that's just a thing to remember when you're sort of using these kind of general accounts. Overall though, quite a lot of them are available, so we've scored it 3.5 out of 5. Okay, next up, let's have a look at the investments that are on offer. And I think, this is a full fat service, right? You're going to get a very broad range of investments and choice. And actually what Interactive says, we have 40,000 investments to choose from. So it could be analysis paralysis, or it could just be a really interesting route around everything that market has to offer. I think it's pretty extensive. That's the great thing about Interactive. And I think when you're looking at this, let's just have a look at this NAV. It broadly sort of groups it up into the two main types of investment, okay? So you can either take a fair bit of risk and go and try investing in individual shares, but that's quite risky. You are totally at the mercy of whatever happens to that company, and investments can be quite volatile when you invest in individual shares. But if you know a lot about business and the way in which finances work as well with business, then that might be something that you really want to get involved in. It's certainly quite exciting. The other, more diversified approach to investing in the markets is to use a collective portfolio. So a fund that has lots of investments within it, and that might be lots of company shares, lots of bonds, different types of assets. It could be invested in different places across the world, different size of companies. There's lots of different flavors of funds out there. And if we are to divvy that up a little bit further, you've got funds. Now, these are what we call open-ended funds, or OEICs, which is an acronym, OEIC. And these are portfolios that have a fund manager that selects the investments that go within them. And what they're trying to do is beat the market that they're selecting the investments from. There are many available in the UK. There's over 5,000 funds. It's the biggest range when it comes to looking at those kind of collective investments. So that's one approach. You could go for something like an ETF that you can see here. That's what we call a passive portfolio. So there's no fund manager selecting investments for it. It will just simply replicate whatever a market that it's trying to replicate. So let's say it's a FTSE 100 ETF. You can see the market here with FTSE 100. It will buy all the same 100 companies in the same proportions. So there's no chance of beating that market because you're effectively buying the same things in it, but it tends to be much lower cost. So that's what we would call a passive investment. Investment trusts are a little nuanced version of a fund, really. They have these extra features. They trade in a slightly different way, but they have a fund manager that's also selecting investments that go in those investment trusts. So it's nice. You've got the groupings of collective versus a bit more intensified kind of risk through these shares. What I thought I'd focus on a little bit is ethical investing. Now, this is about trying to do well by doing some good, really. It's about making sure that your money is invested in the kind of companies, as it sort of says here, that are aligned to your own personal values. And that might be by not investing in certain industries like gambling or alcohol or tobacco, things like that. It could be about the way companies operate so that they have a positive impact maybe on the environment around them, or they treat employees in a positive way, or they have a positive, impact on society as well around them as well. So that's the kind of flavors that you get with this type of investing. It's also called responsible investing sometimes. And I like this page because £6 in every £10 invested in the UK is in these kind of strategies. And it's massively blown up over the past couple of years. So they've got a real focus on this, and they've actually created some tools and to help you select the best kind of ethical funds for you, and then all this very straightforward kind of page that sort of explains it, which is really, really nice. Like this acronym, for example. So if we just focus on that a little bit, it sort of describes the gradual progression as well of this kind of style of investing. So it started off with funds just avoiding certain sectors, as I mentioned, like alcohol or tobacco. Then it sort of moved one step further, and these types of strategies started to evolve that selected companies that could display credentials that showed that they were quite, ethically aware and doing the right sorts of things. And they call this ESG kind of investing. So the credentials that they're displaying are environmental, social, and governance credentials. So it sort of turned the gear up a bit, those kind of strategies on really trying to find good companies. And then we got into this area called impact investing, which is an even more nuanced part of this type of investment strategies that really focus on companies that are trying to actively do some real good in terms of sustainability themes. So, for example, like a solar power company is obviously trying to create a product that's for renewable energy. So it divvies it up very nicely in that way. You can sort of select this kind of increasing focus on sustainability using this kind of acronym, which I quite like. Then got this good video content. And I think what I just wanted to also show you was this filter, which I really, really liked. So it's all about ethical investments, and then you can go in and find strategies that are ethical and also focused on things like UK. So that would be buying only UK shares, or you could go for one that's a bit broader that buys global shares. There's a US one here. So there's also a way of sort of filtering out different versions of the strategy to find the sort of ones that you really like. So I thought, that was a really good feature actually of Interactive, and you can sort of see all the different funds down here and how they sort of fit in with that ACE acronym. Okay, going back up to the top, let's just have a little look at this final thing here, these quick start funds. So if you really want to get going and you don't want to spend a lot of time sort of researching which nuanced kind of fund that you want, you just want to do something simple to get started in the markets, then they have these 6 portfolios that they call their quick start funds, which are very, very low cost, very broad portfolios that differ slightly in how much risk each of those portfolios take. They're 3 by Vanguard, here. They're called the Vanguard Life Strategy. They're very, very popular funds, these. And then you've also got these funds by BMO, which are more in that ethical range. But they both kind of work in the same way, in the sense that they are very, very diversified. They have a lot of investments within them. They're very low cost. And the way in which they'll differ is just having, if you want to take a bit more risk, then they'll have more risky assets within those portfolios. So generally, equities is another word that we use for shares. The more shares that you put in a portfolio and the fewer bonds that you have in a portfolio, then the more risky the portfolio will be. So these are a great way of just getting going and not needing to worry about all the different nuances that I kind of mentioned about whether you were in the UK or in the US or different size of companies. You don't need to worry about any of that. These are just sort of simple in that kind of way. So we think they're really good. All in all, I think we would give, giving the breadth of all the investments that are out there, we give this 5 out of 5. Okay, let's move on to the other sorts of services that I have. So this is looking at things like dividend reinvesting and monthly investing and buy lists and community and things like that. And I think, you can access Interactive through all the channels. They've obviously got a good website, but they've got apps available on iOS and Android as well. And I think there's no financial planning or advice, which Hargreaves Lansdown do offer. But what they do really well is all the kind of content and everything else around that. Great podcasts, great videos, great articles as well. And they've got some cracking journalists that work for them, including like Moira O'Neill, for example, who used to be the editor of MoneyWise, which is no longer, but was a financial magazine. So, they've got lots of sort of great stuff like that. Let's have a little look here. We've got the help and learning section, as you can see here. Plenty of these sorts of buy lists that help you sort of select some of the funds that they think are doing really well. And then they've got this knowledge center that you can see here, which is it's just got plenty of information, if you want to sort of learn about various things, and you can't find it on Steps to Investing. So I thought, that's quite interesting. And in terms of the videos, they do run quite a few interesting things. If you go, I'm just going to take you to the YouTube channel here, actually, because I think they've got some, it sort of shows you the great different bits of content that they do. And, one of them that they've been doing is this Family Money show. You can sort of see, I'm sort of halfway through this video here with Rachel Riley, but it's Gabby Logan who is the presenter for that, and it's basically just talking to lots of different famous people. Who else did we have? We've got Anthony Scaramucci there, you can see Peter Schmeichel, just lots of kind of interesting people talking about their finances and investing. And I thought that was quite fresh actually from Interactive. I thought that was quite good. So you can sort of find lots of those videos on the website too. Overall, we think it does this stuff really well, even though it doesn't kind of have any financial planning or advice. If you wanted to pay for that, you'd have to go and find your own IFA. But all in all, we score it 4.5 out of 5. All right, final bit. Let's go and have a look at how much it's going to cost you. And I think, we mentioned this a few times. It is, so I'm just going to go into services here and then to our charges. And, the flat fee is the big thing about Interactive Investor. And it's an interesting one because, it makes a lot of sense in some regard, just because you have a bigger portfolio. If you're being charged a percentage fee, then you're obviously, it's going to cost you a lot more if you have a bigger portfolio than if you have a smaller portfolio. So, our percentage fee is really fair. It doesn't take them any more work to manage a bigger portfolio over a smaller one. On the flip side though, so I think that's their kind of thinking, but with a flat fee, the problem is it can be a lot more costly for those with a smaller portfolio. The Lancat have done some research here, and then they sort of show some compelling savings that you can sort of make by having this kind of flat fee structure. But I think broadly the way to think of it is, if you've got much larger portfolios, that's pretty cost effective, but if it's smaller, it's going to be quite expensive. So getting on to the sort of charges. So the way it kind of works is they charge this $9.99 basic kind of level, this service plan fee, and that will enable you to open a stocks and shares ISA, any ISAs, any trading accounts. That's all included within that $9.99. And then if you want to have a SIPP, you want to have a pension, you're going to pay an extra £10 a month on top of that. So that's the basis of it. And then with this plan, you'll then get a free trade every month. And I think the thing about Interactive is they don't discern in this sense between buying funds or buying shares. It's just a trade. So if we just go down to some of the details here, yeah, if you're buying funds or shares, that's what will be included, and you're allowed one per month. If you want to go beyond that, you're going to get charged some extras. It depends on the type of investor you are, because some people like to invest in lots of individual shares, other people like to invest in funds. So depending on that, you can then also upgrade your basic service plan and get quite cost-effective extras for that additional money that you pay. So with this funds fund, for example, for an extra £4, you'll then get 2 fund trades a month. If you're particularly interested in investing in lots of shares, then you might want to go for this super investor one, which will give you 2 free trades on anything. So that can include shares. So I think it's quite an interesting way of doing it. I think it very much depends on what you invest in your portfolio. But take a look. I think for us, because we were having a look at this smaller portfolio, £20,000 for more beginner investors, this kind of model is very expensive, and by quite a long way. So for those reasons, really, it didn't score very highly. So for costs, we gave it 1.5 out of 5. Okay, to conclude, it's got all the essential accounts with plenty of investment choice. The website is a bit uninspired, but it's quite clear. It's got great content and supporting materials, and it has an interesting fixed fee model, but it only works well if you have a large amount of money to invest. Overall, we give it 3.5 out of 5.